Hello, it's Keith Prather again with NCM and the Farm Equipment Economic Outlook. Let me share this screen very quickly. Okay, so in the Farm Equipment Demand Index, we didn't see a lot of change in the index this month. We did see a dip a little bit. This is through May. It's the latest data that we have available, but it stretches it out into the end of May, and then we have a little bit of data that's included in early June into this. But 61.8, it came in, 1.8% lower month over month between May and April, and it's still about 4.7% lower year over year. And I think largely in the farm equipment sector, this story is not going to be about current conditions because they're still pretty weak in the environment, and all of you know it. But it's about what's coming, and I think maybe there's some exciting things to talk about in what's ahead of us. And I'll get into that in just a second. A couple other things that we watch, obviously, every month. We do watch the industrial production numbers. And so we're seeing the sector itself still stay a little below average. So we saw productions almost 3% lower month over month and was still about 5% lower year over year. So OEMs, equipment producers and manufacturers are being a little more conservative, obviously, in how much new inventory they're creating until they can honestly see some good sell through. And that's kind of what we're all waiting on. As you know, if you've been following me for a while, we love to go to the Purdue monthly survey of farmers. Basically, it's the Ag Economy Barometer, and that Ag Economy Barometer at the headline level, not this investment index, but the headline level, fell a little bit. We saw a dip between May and June, and I think a lot of it was just still a lot of trade uncertainty, knowing that the tariff pressure is being ratcheted up. And those of us who have decent memories can remember in 2017, 2018, when that happened, it obviously pulled global demand for US exports of grains down with it. This year, obviously, we have compounding challenges because commodity prices are still down. There's a lot of global supply available, and we're having a pretty good growing year. So we know we're going to be adding to that supply. And so that's got commodity prices down. I'm not going to try and get into that side of the discussion of how farmers are doing. We know farm incomes are still going to be weaker this year. But again, I think there's help on the way. Now, the Farm Capital Investment Index, when it comes to sentiment and what farmers and how they feel about investing in the next 6 months, we did see an improvement. We saw an uptick in the commodity index or in the future investment index. It moved from 55 to 60 points, and that 60-point level is, almost the highest. We've got to go all the way back to 2021 coming out of the pandemic to find a level this high. And then relative to where we were prior to the pandemic, 2019, it's higher than many of the periods in 2019, late 2018, just a little bit weaker than maybe what we saw in 16, 17, and 18. But you get the idea that at 60, we're coming well off of the lows we've seen over the last 3 years. And so there's a little more optimism out there that we're going to see the farming community kind of coming back into the mix. And we are going to see a lot of farms be able to start adding new equipment. Um, well, I won't get there yet. So in a minute, I'll show you the catalyst for that. So machinery production, remember these estimates are our models that use 18 to 20 different economic metrics. I mean, we trained them over 25 years. This particular one, even though we've had some volatility lately, this particular one is batting about 97% accuracy 6 months out. And I'll tell you, the reason why it's actually a little bit lower than it has been is because we've been predicting that tariffs and the impact of tariffs would have a bigger impact on the machinery sector. And we're seeing it the opposite. The machinery activity is actually coming in a little bit hotter than what our forecast was. And that's why our actual miss is a little bit lower than we'd like to see it. But still 97% accuracy, it's got some good credibility to it. So what we're seeing is an improvement between now and the end of the year in machinery production, and a lot of this will be ag machinery. And then we see it kind of flattening out a little bit through the rest of the year, and then a little bit of an uptick next year. Here's what it looks like on basically a longer term perspective. It should be above the long term trend, and I have a feeling once we start to see the mechanism in a lot of the new trade deals that are being struck, I think you could see more U.S. exports of some farm equipment. I mean, a lot of farm major farm production equipment manufacturers are already producing in multiple countries, and so they're not going to see necessarily a big benefit in exports, but there will be some brands that will get that tangible benefit. But you do see kind of where we're coming in overall, a little bit weaker than we were prior to the pandemic, a little bit weaker than where we were once we hit our stride in 22 and 23. But obviously, we like that growth rate, and that's going to be a little bit better. The bigger story to me is what we're getting out of the One Big Beautiful Bill Act. That's the real name of it, the OBBBA. I almost throw too many B's in there. But what we're looking at is two, maybe three special provisions down in it that I think are really going to help the farming community. There's 100% bonus depreciation component that has been made permanent. It was there before, but it's been made permanent, and it also applies retroactively. And for the farming industry, this applies to farm equipment. It also applies to some farm structures. Now, I'm not a tax attorney or a CPA, so you're probably gonna have to get some honest tax advice, but based on what we understand in the bill, that a lot of farm purchases will qualify for that 100% bonus depreciation. So if I'm a farmer and I was thinking about making a big purchase of a brand new piece of equipment, I'm going to look at that and I'm going to be interested in it. The other thing about it is they've got to go make those purchases, or they've got to start that construction project in the next year or two because there's a deadline. This runs out on January 1st of 2029. Construction has to be started by then, and most property or equipment has to be placed into service by the end of 2030. So most farm structures are not going to take that long to build. We see a bigger impact of this, like in the non-residential construction sector, where a project can be 3 to 5 years. Those sectors have got to get these projects started right now if they want to benefit from this. But in the farming industry, there's also going to be some good benefits from this, and a lot of that spending would be front loaded. The other thing that's interesting is there's a Section 179 tax provision, and that Section 179 provision allows the deduction up to $2.5 million with a $4 million phase out threshold on it. So that $2.5 million threshold will get most big farm machinery into that cap. And a lot of qualifying equipment will be eligible for this. So as soon as the farming community starts to learn about this, that's when I think you'll start to see an uptick in sales. And the models that I just showed you a couple minutes ago don't incorporate the impact of the tax bill on actual spending or on consumer sentiment or on any of those measures. Maybe the what you saw kind of coming out of the Purdue study with future investment opportunities and the way the sentiment was and showing an uptick in that sentiment. I think that's probably a better identifier at the moment of how much the farming community is paying attention to this bill, what the benefits will be, and how they plan to use it. And so I would imagine by now, 10 days in, many of you are already getting a lot of farmers knocking on dealership doors to at least ask questions about it, or to start browsing a little bit to start figuring out maybe what their next purchase is going to be. So hopefully they'll put those wheels in motion and we'll actually see some spending, see some dollars trading hands between now and the end of the year. So that's why I said I'm more optimistic than maybe what some of the current data is showing us. I do think that there's better things to come. Overall, from a general macroeconomic perspective, we're still seeing a pretty flat economic outlook, at least between now and the end of the year, and then accelerates in 2026. We'll look and see how many of the trade deals between now and August 1st can get done. We just were hearing about an Indonesia deal that looks like it's going to get passed, which will have some ag benefits buried down in it. Could be on the order of $2 to $3 billion in additional U.S. ag exports to Indonesia. And then what we're hearing is there's another India deal, and the India deal could even be bigger than that for ag exports. And we're hearing about a wave of 4 or 5 or 6 behind it that would also have some big tangible agricultural benefits to them. So a lot there, a lot to digest, but I think the bottom line is this is going to be a changing environment, but for the first time in 2 to 3 years, maybe changing for the positive. even though commodity prices are still low, we still see a lot of pressure out there in the farming community. Incomes possibly down this year. Again, the tax benefits at a personal consumer level, which I didn't even talk about in this video, but most households are going to see a $7,000 tax benefit going into next year. So you think about off-farm incomes getting boosted by $7,000 each. Not a big impact, but if I measure that over 3 or 4 or 5 years, suddenly in my mind, I may think that I can start to afford, a 50, 60, $70,000 piece of equipment and spread that out over 4 or 5 years, and the tax benefit alone would pay for it. So there are a lot of different ways to slice and dice this, but hopefully you understand why I feel a little more optimistic about what's coming around the corner. Again, a lot of things we still have to work through, still a lot of tariff pressure out there, but I do think that things overall will improve. So I've said it too many times. I need to quit. So anyway, I hope you all have a safe month, and we'll talk to you again next month. All right, take care.